It's a very interesting time to be involved in exporting with the low Australian dollar and a lot of free trade agreement information that's in the media. So thank you for coming along and hearing about this information on exporting. On today's agenda, we're going to go through a little bit of the exporting. Is this the right time and right fit for your business? The 5 C's of exporting, so determining your export objectives around the 5 C's, discussing very briefly some of the emerging market trends, free trade agreements, and at the end we're going to wrap up with some tips for success to help you get underway on your journey. Okay, so first off we're talking here about the fit to your business as to the benefits of exporting. Now exporting is a great opportunity to expand your business and grow beyond your domestic boundaries and consider some of the opportunities for your business into new markets, hopefully to access new customers and then the opportunity to grow your business accordingly. It also gives you the opportunity to spread your risk in terms of domestic economic cycles. So if things are a little bit quieter in your domestic market for your particular product or service, you have the opportunity in accessing other markets that may be in a different phase of their economic cycle and take advantage of the growth in that area as well. If your product or service that you're offering in the domestic market here in Australia is of a relatively mature stage in terms of its product life cycle, there's an opportunity through exporting to enter other new markets where that product may be still relatively new or in a stronger growth phase. So the opportunity to extend the life of your existing products. When you start researching your export opportunities on the international stage, you really get a great opportunity to see what's happening out on that global stage in terms of market opportunities, new ideas, products and practices that are out there. So it really is a great learning when you're looking externally what's happening in the market, the opportunities out there. If you are successful in your exporting journey, you may have the opportunity to increase the volume of products that you're making, and that allows you to get some economy of scale in your manufacturing as well. So that reduces your costs here domestically. It can even help you be a little bit more competitive. One last point just on this one, the identifying counter-seasonal markets. So if you're an agricultural producer or you're producing a product that's linked to a particular period, say if a demand for your product might be higher in summer, or by accessing an export market in the northern hemisphere, you have the option of accessing the counter-seasonal supply into that one. So that's another good one of exporting. So thinking a little bit internally to your business, before we get down to the details, we just wanted to think about how does this fit with your business and is this the right time to do it? Most exporters are working from a fairly successful domestic base, and they use that successful domestic base to launch them out into the export world. That's not always the case, of course. Some businesses are what we call born global, but there is the opportunity, and probably the most recommendation is to build on an existing successful domestic business and progressively develop that there. But there are some things you're going to have to change or consider in your domestic to export journey, as they do have the ability to engage additional staff with new expertise that might be able to help you with some of that international business. Do you have the opportunity perhaps to increase your production runs to handle the additional volumes that might be required? So your premises or production equipment may need a change, or the product or service you're taking internationally may be somewhat different from what you're offering domestically. So you have to have some flexibility in how you offer that as well. And of course, the working internationally can be a little bit more of a challenge from a cash flow perspective, that it's a longer cycle between the order, delivery, sale and payment process there as well. So that can be a little bit longer in the cycle. Okay, well, we're going to start on the first of those 5 C's that I mentioned earlier on, and we're going to talk the first C being company. So this is an opportunity to look inwards to your business before you sort of start looking the export side of the world. And we're just wanting you to have a little bit of think about your business in terms of its capability and its capacity for growth. So exporting is going to require a sustained effort and a fair bit of flexibility on your behalf as you go down this pathway. And that's going to require you to have some new skill sets and new capacity and capability within your business to consider. So you really got to think, am I at the boundaries now or have the opportunity to accommodate more growth? You're thinking also about what you're doing domestically, what has enabled your business to be successful, what we call perhaps your competitive advantage, that you're being successful here domestically. Do you have the ability to then leverage that into an international market? So is your competitive advantage something that's transferable to another market? I'd like you to think also a little about your company products or services that you may have, and probably take a bit of a critical review of those as well, and looking at, is your product or service really competing or has the potential to compete at that world-class level? As you're now going onto the international scene, so you're not just competing against other fellow domestic operators, you're really starting to play with some of the world's best in taking into those markets. And be a willingness to perhaps modify your product. You maybe need to seek some new certifications or accreditations for your product or service to be delivered in those markets. So there's a fair bit of looking at that product and service element as well. I'd like you to also now consider about how you approach just to marketing and sales. What you're doing domestically must be working well for you if you're a successful domestic business, but you've then got to say, does this adapt to an international environment? Can you adapt your messaging? Can you adapt your marketing appeals and your messaging around those elements? And does that going to work in an international market? So you have to think fairly carefully about your key marketing message and whether that will translate internationally and still align with your product offering and services you wish to take internationally. And the fourth one I just want to talk about there very briefly is the management commitment to the exporting journey and the resources they're able to bring into play for the business to be able to sustain that growth. So you may be the manager of your small business or you may be part of a management team. You've really got to think of the commitment to making to the export. There may be additional capital required for the business. There may be some additional operational finance required for the business to sustain that growth. Carry that longer cash flow cycles, as I mentioned before about payment, and also put in some practices that might be able to mitigate the risks associated with your business operating internationally. There's also a point that you're going to be spending some more time offshore, be it travel or trade show activities. So you've got to have some resources in play to ensure your domestic business continues to run smoothly whilst you're doing your international activities. Okay, the next C I'd like to talk about in exporting is talking about country. So a lot of markets out there, a lot of opportunities to expand your business, but the challenge for this particular one is focus. It's all about identifying the possible markets that could be suitable for your business to expand into. So the initial criteria I'd like you to think about identifying some of these possible markets is just, first off, is there likely to be a demand in that market? So obviously you need to have potential customers and demand. Looking for markets that are possibly a little bit easier for you to get involved in. So we're talking about the level of risk getting involved in some of those businesses. And for most exporting businesses going to their first market, we're looking for a market that has some similarities between what you're doing domestically here within Australia and perhaps trying to take advantage of your knowledge and understanding of those similarities and go into those markets there accordingly. The intent about looking at your possible markets is really trying to create a short list, about 2 to 3 markets you think would show the right sort of potential about some of those criteria I mentioned before. And then once you've narrowed it down to those 2 or 3, the opportunity to dive more deeply into the export research you're going to do. Some things you might want to think about is determining the ease of entry. So some markets have a higher level of regulations. Some markets, of course, have quite a different language and culture as to communication with your customer base in those markets or intermediaries. And even some other markets quite often have a very different approach to doing business as compared to your traditional Australian business model. So those ease of entry and some of the regulations are certainly worthy of investigating. You've also got to have, in terms of products, of course, suitable logistics to be able to get the product that you're sending to those markets landed in the market in a timely and affordable way. Or if you're a service business, you might be saying, well, what's my control about ability to set up a business in that market so I can deliver service directly to the consumer in that market? Can I employ staff? Can I do the appropriate training, and will my training be recognised in that market? So some of those regulations, some of those early points to consider in narrowing down that market. Some of the market opportunities, and we'll talk a little bit later about free trade agreements, but in some markets, Australia has a competitive or comparative advantage of getting into those markets as compared to other international countries exporting to that market. So we have our sort of foot in the door with some of these really great free trade agreements that are on the radar, or you may have a market advantage, be it from a time zone or other elements that allow you to service that market very effectively. So just in wrapping this little one up here, when you're thinking about your countries, approaching a new market, I'd encourage you to do as much research as you can of all the relevant information directly from your computer. There's a wealth of information available for you to get a lot of intelligence, market intelligence about that market. I really would encourage you to talk to export professionals that are already exporting, be it that Trade Investment Queensland or Austrade or even an industry body that you may be a part of, taking advantage of that knowledge and that expertise that's there. Once you're getting down to that more intense level, you might want to consider doing some paid research for very specific information, issues you might need to resolve or connections you might need to make in the market. And finally, when you're down to that narrow list, I certainly would suggest the opportunity of visiting the market, perhaps around a trade show or a conference event, so you can sort of really see for yourself firsthand what are the opportunities in the operating environment within that market. Okay, this little chart here is I'm just showing you very quickly, the world is not the same in terms of risk and difficulty of doing business. There's some resources at the end of the slide. It's going to give you some links, but here's an example of how the world has been broken up in terms of risk assessment of doing business internationally. So for a first-time exporter, I'd be looking for those dark green markets as a great place to start. Okay, we're on to number 3. The fifth there is the customer. This is about looking beyond some of those high level population demographics. We get very excited about China and America and India, huge populations, growing middle class populations, very exciting, but it's often very important to look beyond those high level indicators and look a little bit deeper into the sub-segments. How big are they and how wealthy are they? How much choice do they have about the products that they do? How do they go about buying their products and services? What you're really looking for in those markets is for those early adopters, those people who are willing to change their current buying behaviour and look at new opportunities and new products and trying to understand what influences them to trial a new product when it's brought to the market. So if you can get them on board, the others may follow hopefully, but they're the ones you're looking for. You might want to consider doing some in-market focus group testing. This is a great way to get some feedback about your product or service that's going to that market before you go through a large production run or take your product and branding to the wider market and find out that very quickly there's some feedback, whereas if you tweaked something else a little bit earlier, it would have been much better received. So better off to do it small, get that feedback and adapt accordingly. Even if your product is totally new in terms of that market, you're still going to have to expend some time and funds educating the market about your new product or service, or trying to convince them to trial or convert. A good example would be, say, in a retail setting, you see people that are giving the product samples and product trials in the shopping centre. People get the opportunity to trial the product. So it's a low-cost way of getting feedback, but experiencing a product without any risk on behalf of the consumer. Again, talking about the customer, I'd really encourage you to seek advice from in-market professionals, people who are based in those markets, even your potential agents or distributors or international buyers that you might be dealing with that have expressed an interest in your product. They really know their market and their consumers best and know what works in that market. So be very receptive to looking for that feedback and information from them and adjust your messaging and adjust your appeals here accordingly. You may need to change your packaging, your portion sizes, or your colors, or all the imagery that goes around with your marketing collateral, just to be adjusted to be more suitable for that market. So once again, test the market, seek the feedback, and be adaptable with some points from that one. Now this is one, number 4, where we talk about the channel to market. So maybe not a term that you may use in every day, but it's about 2 elements. One element is your intended structure of how your business and product is going to get to the end consumer. So we talk about the entry structure. I've listed 4 there that are fairly basic types. There's quite a lot of variations on the theme here, but a direct would be a consumer ordering the product from you and you sending the product direct to the customer. Indirect would be via an agent or a distributor happening in that market. So still essentially your product is being sent from Australia in its final form. For some products, be it either from their limited shelf life or they're so big and bulky that you can't ship them easily, they might consider a manufacturing under license in market arrangement where someone is manufacturing your product or delivering your service, but they're doing it according to your rules and regulations as to how that operates. You might consider a joint venture, potentially within market partners who have a similar approach to delivering services or products into that market. So you might join joint businesses for that particular market. Or alternatively, as some people will do, they'll look to replicate their Australian footprint or Australian business and start owning a new business in that market. So a wholly owned subsidiary is a good example of that one. Related below that is the distribution channel. And this is what we talk about, probably easiest to think about it from a consumer level. Where do you expect to buy a product from? What is the natural point of where you as a consumer would go to buy that style of product? So in a retail sense, if someone is looking to buy a product and they immediately have in their mind, well, where do I think I would find that style of product? So you're trying to find that outlet, or what we call the channel, where that customer expects to buy the product from. And most importantly is to make sure that you can get access to that channel, either through your selecting your importer, agent or distributor who's going to help you get into that channel so your product is positioned in the right place for the consumer in that market to find. It can be sometimes difficult for companies that have a single product range or a single service to get visibility or coverage. So you're trying to get into places where your typical consumer is already conducting business, so they get presented with your option at that time. So you're targeting the right sort of channel for them. And one final channel I'd like to just draw your attention to is the rise in e-commerce or online purchasing by consumers. That is really changing the dynamics that it's changing the dynamics that consumers are not going to traditional retail stores and the loyalty and numbers that they were in the past. They're buying online. So your ability to now to support those online channels is another important distribution channel many businesses need to consider. Okay, number 5, the competition. Those guys out there that you're going to have to fight for the slice of pie for business in those markets. So when you're doing your assessment of your competitors, you're really trying to determine what is the level of the existing competition in the market that you're going to. Is there a large dominant domestic producer who really owns that market space in that market, and how are you going to compete against them in that environment? For example, in some markets, there's very strong patriotic alignment with some of the domestic producers. In the case, I might give an example, say in the United States, people are very keen to buy American product. To them, that's a very strong product to buy, an American-made product within that market. In some other markets, such an example maybe say in China relating to processed food products, the consumers are somewhat distrusting of the local brand and are actually actively seeking out international brands to feel more confident in their products. So it does give you a little bit of an idea about what's considered a domestic producer as compared to imported products from Australia, but also imported products from other markets as well. I mentioned earlier on about the maturity of the product and the market life cycles. It's important because it really determines what is the competitor strategy for that market. So if you're thinking that it's in a growth stage, everyone's fighting for market share, new products, all sorts of activities are happening about getting more consumers to come across to the new product or service. If it's in the maturity phase, it's about trying to compete between market share between suppliers, or if it's in a decline phase, quite often the competition is around price and who is the lowest cost provider. So the stage of life cycle, be it product or market, can often be a very different competitive strategy to how you deal with the competitors in that market. So certainly evaluate your competitors' products or services, be fairly critical, have it in your mind, what does the consumer value? It's very often we can talk about products, we get very interested in the specifications about their products, but what ultimately influences the new consumer to change their product or to change that? What do they value? What's the decision-making points for them? And be aware that sometimes competitors, once they find you coming into the market, can be a little bit aggressive in their response, and they might be quite willing to drop their price for a period of time. So there can be some competitive response from these competitors as well. Okay, that's a quick covering of the 5 C's. I'd like to now hand over to Julie.
Thank you, Ross, and welcome to our participants. I just want to briefly just highlight to you some of our Queensland's merchandise exports. Please note that this is just for products, not for services, and you will see that 80% of our top 10 are in the Asia Pacific region. So this graph just shows our key markets currently, or for the last financial year, for Queensland export. The bulk of Australian export is in minerals and energy and ag products. Many of these are considered commodities and largely influenced by price or availability. The opportunity is for Queensland is to move up to the value-adding stream and knowledge-intensive industries or services, where the proposition is about value and benefits, less about the lowest cost, and most importantly, by developing a relationship rather than just a transaction. For an example, currently our emerging export trends, and I'm just going to highlight just 2 countries quite briefly. The first one being China as our #1 exporter. As most of you would be aware, it is predicted to become the world's largest economy in the near future. It's growing educated and middle class, and its proximity to Queensland offers significant opportunities for Queensland companies. China will shift its economic model from quantity growth to quality development, and Chinese companies will invest in sectors beyond the resource sector. This, plus the continuing growth of personal income and educated population, will see China's services sector become increasingly important, with tourism, healthcare, niche food products, technology and renewable energy presenting opportunities. Secondly, I'd just like to highlight India. It's predicted to be the 3rd largest economy by 2030, and India is undergoing major reforms and embracing pro-business policies to drive its large-scale development program. With rapid urbanisation of 250 million people will change the market appetite for sophisticated goods and services within the next 5 years. E-commerce is a rapid growth sector, and the e-learning industry is expected to reach 1.8 billion Australian by the end of 2018 financial year. India is poised to grow its economy with a strong focus on modernisation, consumerism, skill and capacity building and capability development, which brings significant opportunities for Queensland across diverse sectors. These are just a couple of examples, but on the Trade and Investment Queensland website, we actually have now listed under our international markets overviews, and they actually go into more detail, highlighting some of the current opportunities, mid opportunities and long term. From a sector perspective, just wanted to showcase two innovative technologies and our food sectors. Just having a look at some of the market trends in those areas. Japan's future economic growth will come from knowledge-based industries such as IT and biotechnology, robotics, nanotechnology, environmental technology, new materials and space technology. So Japan is well poised to collaborate with Queensland on research and development and commercialisation. With an ageing population, reform of Japan's health and medical research will be a priority for Japan. With a lack of domestic growth, the Japanese government also encourages Japanese companies to expand in Southeast Asia. This will create a partnership opportunities for Queensland companies to provide expertise. New Zealand has also become our largest market, a major market for Queensland horticulture. However, stringent protocols resulted in some pesticide bans being imposed on Queensland exports of tomatoes and capsicums. These bans have now been lifted, and that has allowed approximately 2 million worth of capsicums and vegetable sales to New Zealand last financial year. New Zealand is set to become our second largest importer of Queensland mangoes, and currently we're exporting approximately $18 million worth of sugar and honey to the region. New Zealand is actually a country that's of interest to a lot of new exporters for ease of business and being very similar to how we operate business in Queensland and just geographically as well. So in the future, we're actually looking in the ag industry that New Zealand, there could be quite a few other products that will be exported there, such as apples, apricots, cherries, honeydew melons, plums, rock melons, etc. Very briefly, because free trade agreements are actually quite comprehensive, but just to give you a bit of a highlight and to explain that the purpose of the free trade agreements is to provide a framework for our commercial relationship with our trading partners, to increase trade and investment opportunities and most importantly bring money into the Australian economy and help create jobs. The benefits of the FTA or the free trade agreements is to increase the attractiveness of your goods in selected markets. This is due to lower price in comparison to other exports. FTA benefits also reduce non-tariff barriers, for example, address import-export protocols, quotas and customs regulations. It is also designed to open new markets for your product, reduce the cost of imported products for your business, provide greater business mobility. For example, FTA can include provision to improve business mobility by the relaxation of business visas, and to increase the attractiveness of Australia as an investment destination. If you'd like further information regarding the FTAs, please feel free to contact us and we can actually talk to you more one-on-one and what's relevant to your business. So I'll just hand back to Ross.
Thanks, Julie. That's much appreciated. Okay, we've covered a fair bit of material now in terms of some of those 5 Cs, free trade agreements, some of the emerging trends. I just wanted to wrap up some key points about the tips for success for you in your export journey. So first off, the one was about reviewing your business internally and trying to determine, is this the right time for you to commence the exporting journey for your business? About that capability, capacity and commitment. Research, I'd really like to encourage you to research those intended markets very carefully, As I mentioned before, there's a lot of good reports and data available that will help you grow your understanding of business and allow you to narrow your focus. You may need to undertake some paid research with those various people in those markets to refine your shortlist, but to get that exact information that you need so you can make good business decisions thereon. I'd encourage you to initially consider markets with more similarity to your existing customers and less complexity, rather than just looking at those attractiveness of those very large populations and those very large markets. Really encourage you to visit the market, attend a relevant industry trade show. Great opportunity to gather some market intelligence about the similar offerings of competitors, assess how they interact with the consumer and their channels that they use in that market. You can look at the preferences that customers seem to be exhibiting about how they buy one product over another product, and looking at some of those buying behaviours where they like to purchase their products and how often they like to purchase, those sort of elements. You're really getting that face-to-face opportunity of learning with that. Whilst you're in the market, I certainly would encourage you to meet the staff from Trade Investment Queensland and or Austrade, if there's no Trade Investment Queensland office there in that particular country, and talk to them about your business aspirations in terms of exporting, and we can set up those meetings for you to have those conversations at any time. So evaluate your competitor offerings. So really understand what they offer and what consumers like about that offer, and then how importantly, how to differentiate your offer from that of potential competitors. Be willing to consider changing your product or service delivery model from what you perhaps have within Australia to what you're going to do in a different international market. You may need to review what your approach to marketing is going to be and how you're going to position your product or service in the market compared to other offerings that are there, and also the messaging that you're going to put around that can influence the consumers there accordingly. You need to really understand if you can meet the price expectations of your customers and still meet the margins required by the intermediaries involved in getting your product or service to the end customer. So is there enough margin opportunity but still retain at a price that your consumer is going to find acceptable? Select your in-market partners extremely carefully with a view to a long-term relationship. A lot of standardised international contracts and information that is available that you can take and use and for opportunities to make these relationships formal and structured. Be aware that you quite often will get a request for exclusivity when you're going into some of these markets as well. So it's not an unusual request, but it's how you respond to that and how you manage that question. You might want to talk about the area of agreed coverage, how long the exclusivity may operate for, what sort of targets might be achievable, and what sort of points you might want to review those exclusivity arrangements if they're achieving those targets or not achieving those targets or certain periods of time. It's also important for as an Australian supplier in your conversation with your buyers is to be realistically in your terms of your supply capability and your order timeframes. You don't want to set up a relationship based on where you have overcommitted your ability to supply your domestic market and your export market, resulting in a late delivery or a short delivery, really damaging to those relationships, not the way you want to start off those longer term relationships as well. Like most relationships, they're very exciting to start, but they're quite expensive to end. So pick your partner very carefully. Next point I'd like to mention is about managing your exposure to risk in terms of your domestic business and on your export journey. I would suggest to you it'd be smart to start with smaller orders to trial the interest and uptake by the consumers, and seeking early feedback as to how well it has been received and what could be adjusted or to make it more receptive to that market. I'd also encourage you to consider payment terms and shipping arrangements that are at the low risk setting for you as the exporter, so that you're getting paid early and products and freight and other aspects are at the risk of the buyers, or they're taking greater responsibility for that. Again, I'd encourage you to get advice from professionals in export, professionals in the finance space in terms of getting your payment arrangements, specialists in the areas of freight forwarding and customs to make sure your logistics are effective and your customs clearance elements are correctly done as well. I can't overemphasize the importance of getting your export documentation correct, because if that documentation is not correct, it can impact upon the clearance of your freight through customs. It can also impact upon your ability to make payments and people to pay you accordingly. So the documentation is very, very important. One final little tip I'd like to mention is around intellectual property. Make sure you register the elements around your brand, your domain name, or any elements of your design. It's very important to get that registration in those key markets early. It's important that the strategic partners that you might be working with in those markets understand your intellectual property. It's in their interest to protect that as well. And if there are some elements of your product or service that you can maintain a little bit of trade secret or control of that part retained within Australia, that can be a good strategy as well, so they can't be easily copied or duplicated in market because they're missing the critical element that you've retained control of within Australia. An important thing about intellectual property is that the infringements by others may result in the loss of sales, and that's not good, but the bigger issue is really about the potential damage to your reputation or brand, because these copy products are often inferior and people will think they've tried your product when in fact they haven't, and that impacts upon your brand and your reputation. And in some markets, you're also going to have to consider the cost of defending your intellectual property, the resources you're going to devote towards that, versus the funds you might want to expend on developing your business activities in that market. So sometimes it might be better to get into the market and work hard in that market and control your IP as best you can, but not chew up all your resources in fighting those battles. I'm going to hand back to Julie now.
Thank you, Ross. Well, the idea of today's webinar was just really to be able to provide you a snapshot of how Trade and Investment Queensland can actually assist you on your export journey. For those of you who don't know about us, we're the government's global business agency, and we assist exporters to break into emerging and established markets and promote Queensland as a perfect place for an Asia-Pacific headquarters. Exporting can help make your business more profitable by exposing your products and services to a large number of new customers. TIQ currently has Australia's largest international trade networks. We have 8 regional offices. Some of the staff are joint Trade and Investment Queensland and Austrade staff, so we share resources in some of these locations with our key stakeholders. And we also have 14 international locations. TIQ is available to help Queensland business who want to expand their products and or services in any of these markets. We do this through trade missions, our industry partners and our global network of industry experts, our overseas trade commissioners and our regional advisors, who can help you to connect with international markets and take advantage of demands in priority industries. We also hold regular events, and our major one each year is held in October, which is the Queensland International Business Series. This is an opportunity for you to actually meet with and have discussions with our trade commissioners who actually return to Queensland each year for this event. So just in closing, I'd just like to, on behalf of Ross and myself, thank you for your time today, and please feel free to contact us and engage with us. Trade and Investment Queensland provides a complimentary service to assist you get export ready companies, so connect with us and be connected. Thank you.